the prediction that I've had is like ETF and Bitcoin flows are going to be basically the same. And if you look at just like the BlackRock flows, which are driving most of both Bitcoin and ETH, like yesterday, I think was like 170 for Bitcoin. And then it was like 90, I think 7 for ETH. So like we're at 50% today. And that is, twice as high as basically everybody else has said. And I think it'll continue to go higher. But it's been a smashing success for the ETH ETF. And it's good to see Grayscale speedrunning the outflows as well, because that just hangs over the market. And it feels like the mini trusts are also absorbing and helping at least some of that flow to get out. So it's very, very positive. And BlackRock and the other ETF providers have an obligation to make sure this stuff goes well. Like if these are duds, it's like not a good look.
Hey everyone, this episode is brought to you by Sei. After several months of effort, Sei's V2 launch is live. Woo! Let's go and introduce the first high-performance parallelized VM to the world. Stay up to date by following Sei at Sei, that's SEI Network, or you can experience the speed firsthand at sei.io today. Thank you very much for being a partner to Bell Curve Sei. Hey everyone, this episode is brought to you by Re.al, a new permissionless L2 built on the Arbitrum Orbit stack by DeFi natives for DeFi natives for tokenized real-world assets. It's a very cool chain. Highly recommend that you go check it out. And they just started their rewards program. So you can type in re.al/rewards. You can use the code in the show notes below. All right, thanks everyone. On with the show.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another roundup of Bell Curve. We got Michael's 1 and 2, Vance, and today we got Myles joining us as well. Fellas, how are we all doing?
We're back.
Good to be back.
Seems like the stock market's melting, but we're back. Crypto's actually
Bitcoin's held up very well. Actually, we had a huge miss on jobs this morning, and Nasdaq sold off like 2.5%. Bitcoin is, I think, moderately up on the news, which is.
ETH is rallying, Bitcoin's rallying. It's like, you have these moments where it can actually be an alternative. And when Intel is down 21% in 15 minutes of trading, like, I think there is a good argument of like, do you want to own tech or do you want to own crypto?
Why is Intel down 21%? Jesus.
They basically
halted
purpose of an earnings call. They laid off 15% of their workforce. They fired, or they cut their dividend. They
halted it, which is like the worst thing you can do. Basically, after Q4, they're like, I don't know if we're gonna have a dividend anymore because we're not. It's pretty bad.
Yeah, this is the dividend. The dividend suspend is not something that investors like. Never popular.
Ethereum's dividend never stops. It may slow, but there's a lower bound.
Yeah. Well, it's good to be back stateside. Actually, I just got back from, I know it's early morning for you guys. I'm also jet lagged from, just flew back from Ireland. I was hanging with a mutual buddy of me and Myles. Actually, I wore this sweatshirt that I'm wearing. Do you guys know the brand Black Dog at all? Like, is that a familiar?
Yeah.
So it's like a brand that's native to Martha's Vineyard. And only at the end of the trip was everyone like, why are you wearing this like grandma dog sweatshirt? No one recognized the brand.
You guys don't know this?
Yeah, no. But West of Ireland, very good. So maybe we can chat a little bit about, I know this happened a little while ago, but wanted to get your guys' read on the Trump Bitcoin conference appearance. So he gave a very long speech, very, very hyped up. People were really excited to hear what he had to say. And he covered a number of different things. And some of them was more maybe like pandering to a Bitcoin audience. There was like, someone must be coaching him to say a lot of this stuff. But, he had like, I'm going to free Ross Albright on day one type thing. He said he's going to fire Gary Gensler on day one, which was greeted with like rapture. It was just.
I don't think he has the power to do that, but do you think?
I don't either, but it was like he was actually shocked. If you see the clip by the applause that he got, like it was like 2 full minutes of applause. And then the thing that ended up getting a bunch of the headlines was this strategic Bitcoin reserve, and that was actually Cynthia Lummis actually proposed something much more comprehensive. And RFK said that he would like to see the the U.S. buy $618 billion worth of Bitcoin, which is the amount that the U.S. holds in gold reserve. That'd be a pretty big multi-year TWAP. But what Trump ended up actually saying was just, I'm going to commit to not selling any more of the Bitcoin that we already have. And so, yeah, which is definitely good. And it actually looks like the U.S. is selling Bitcoin again. So just in general, like, what was your guys' take on the speech and this kind of, I don't know, on forever ongoing politics debate that's happening in crypto these days?
I mean, my visceral reaction was it's very obvious that he is going to be the pro crypto candidate when it comes down to it. I think even if there was a catch up by Kamala or any other candidate at this point, it would just feel disingenuous because this has been consistent and it's been, there isn't another candidate who has an NFT collection. And going to this event in the first place is a huge signal. So that was kind of like the initial backdrop. I think, there's also this, like, I don't know if you guys remember, like in middle school when you'd have, school board elections and like the promise of all the candidates were like, no more homework, or like, we're going to have double lunches. And it kind of feels like we're if it was going to be something where he proposed something similar to what Cynthia Lummis or RFK proposed, it would feel a little bit too close to that realm. It feels like not selling the existing Bitcoin that's on the balance sheet of the government, and it is spread throughout a number of different agencies and regulatory bodies. Like the DOJ has some, I'm sure, like Secret Service has some. They have amassed a pretty serious amount of Bitcoin, but it's not all contained in one wallet. And it's not all contained by one entity. But not selling it feels like a reasonable way to approach starting to hold some on behalf of the Treasury, which is what would control the strategic whatever reserve, digital asset or Bitcoin or whatever it is. So it feels reasonable. And I think we're going to buy 550 a day for 4 years approach is probably not reasonable, but I definitely gets people excited. I definitely think, to what Van said, I don't think firing Gary Gensler on day one is even feasible, but it does signal to the market, the trajectory of enemy number one for crypto is out, and nobody else from a candidate perspective has said that.
Yeah, that's sort of my perspective as well. I don't really know how feasible it is or how smart it is to telegraph like a multi-year, multi-billion-dollar TWAP from the government. I know everyone wants to see that, but I think the much more impactful thing would just be if people could just operate in the United States again without fear of getting indicted or unfairly prosecuted. And he actually did refer to this as well with kind of the Nick Carter phrase, choke point, 2.0 type thing, that they would end that. And that's not going to grab as many headlines. That's not, hey, the government is going to buy a bunch of Bitcoin and they're debating whether or not that makes sense and what does a strategic reserve of Bitcoin even mean. But, just as someone who's, tries to think about operating a US-based crypto business, I think just clearer rules of the road and less concern about unfair prosecution is the much more impactful thing from my perspective. So.
Yeah, I agree. If it translates into like policies that actually move the needle, that'd be great. We'll see when we get there. This feels like a super easy win, just to not sell and then move some coins into one place. But yeah, I guess to Michael's point, like sets up the structure for the potential of that of actually buying crypto in the future. Does the government hold any ETH or like SOL at the moment? No, just
unclear.
Unclear. Okay.
No ETH.
I mean,
or little ETH. Sold.
Get that MetaMask spun up.
I mean, yeah, exactly. When the government, when you get taken down as a perpetrator, they take all your things, including all the, gold bars, the cash, the guns, and probably the crypto. So ostensibly, the government has all kinds of crypto. It just doesn't know what to do with it, or it isn't big enough for it to be reported on. I do think it is interesting, though. Like, I know there's sort of been an effort this week and over the last 10 days, give or take, to kind of look at both what looks to be both candidates at this point and say, okay, this is our chance to spread the love and have it be something that's bipartisan. I'm curious your guys' thoughts on. It seems like this is coming from one side of the political spectrum. What do you think about how it could, or if it could, be something that comes from both sides?
Well, it's important to remember, as you see Kamala Harris's odds rallying, that ETH is the coin of the liberals, as so many people on X have shitposted and accused us of. So I think ETH will be fine. The rest of the market, pretty unclear. I do think there is probably a bipartisan approach to crypto, where maybe it's not Donald Trump trying to stack BTC in the strategic reserve, but it's probably legislation, market structure, stable coins, and kind of that's what we go off of. But I was thinking about, like, if it's not Trump, if it's Kamala, I still think it's going to be Trump. Like, what is the actual difference in crypto policy? It really, I don't know. Like, it probably wouldn't be that different, is kind of my actual gut sense, if there is a legislative framework. If there's not, I still think it's at the discretion of the SEC, but it certainly feels like crypto is going to get a vote on one or both of those bills. So it's not like having like a president who's like more or less enthusiastic after those passes makes a real difference.
Or go, Myles.
Yeah. I was just gonna say, I feel like it's a bit of a coin flip, where I think they've realized that taking this anti-crypto stance is not winning them votes. It's been net negative. That really only comes up in election years, though, like for the most part, or like becomes most poignant. And I could also see them just kind of forgetting about it and putting Gensler 2.0 in place as soon as the election's done, if they do win. But hope for the best.
Yeah, I think there are kind of two debates that are getting tangled up into one here, at least from my perspective, which is crypto a bipartisan issue? And then let's say that it is a partisan issue. What's the face that you project to the rest of the world? And it might very well be the case that crypto just ends up being partisan. Like, I'm pretty sympathetic to the view that, yeah, like I think there's some truth to the idea that, okay, the Biden administration is going to be, we don't even know what if there was a Harris administration, what that would even look like now. How different would it be? But I do think there's some amount of truth to this idea that's been presented that the Democratic Party as it stands today is like a little bit less accepting of the like ideals and ethos of crypto. But I still think that's like up in the air in general. But then there's this like, okay, let's say you were to even accept that it's a partisan issue. How do you interface with like the Dems? And the point that I feel relatively strongly about is like, it doesn't make much sense to like spit in the face of, one of the major political parties in the United States. And, I've seen these lists on Twitter of, demands like, this is what we would demand from the Democrats. It's like, you'd free Ross immediately and fire Gary Gensler. It's like, guys, I mean, that's never going to happen. And if you talk to the people who actually try to make change in DC, like our advocacy groups, they're like, guys, this just isn't how you actually get stuff done. So I think there's a way that you can engage and put a good public face on without just being openly hostile, which I think would be counter to all of our objectives, even if it does end up being a partisan issue. And I think those two debates are getting kind of wrapped up into one thing at the moment. But
yeah,
that's how I feel about it personally. But I guess, what do you guys like? Last maybe point on this whole political thing is obviously Kamala is doing. There's like a big, she's brat energy and she's crushing it on TikTok and like maybe having a little bit of a honeymoon period. Like she hasn't really, I don't really know what her stance is on anything. Like I haven't seen any substantive like policy or what her cabinet would look like or anything like that, but she's climbing in the prediction markets. I saw Nick Carter tweeted something, in hindsight, turning Trump into or Bitcoin into a Trump win market might have been a mistake. And people are maybe equating the performance of Bitcoin in the last week to Kamala's odds climbing. I'd be curious, just in general, do you think that's what Bitcoin is actually trading on, or just like we talked about a couple of weeks ago, it was less about the news headlines and it was more just about government selling, that type of thing? But yeah, what do you guys think about this idea of coins trading on election odds?
I mean, the nice part about markets is they don't all move because of the exact same reason. There's some proportion of them that move for one reason. There's some proportion that move for another reason. I don't know what exactly that proportion is. I would say my guess is that broadly, you've got 70% of coins are moving because of flows, government selling, the ETH ETF relative, there are definite, I would say structural things that are happening, and probably around the edges, let's say the 30% is, people who are like, maybe I'm not going to buy the marginal Bitcoin this week and give it a little bit more time. I think broadly, it's the way I think about the election right now, or at least the odds, is like there's a massive comeback at the last, in the fourth quarter, and the game's tied going into regulation at the last second, and like overtime just started. It's like a new game, fresh legs, like everybody's got 5 minutes left on the clock, and like a new period just started. And what we don't know is we don't know the platform of the Democratic Party. Nobody has any idea what they stand for. Is it going to be Joe Biden 2.0? Is it going to be like 180 degrees different from Joe Biden? Is it going to be pro-crypto, same anti-crypto, pro-business, anti-business? Like there are a lot of major question marks. And I think what we'll see as that starts to come about, and they'll have to report on who's the VP pick, who's, what's the platform that they're going to be building on, where they're going to be spending time, which will give you a signal as to how they're positioning themselves. All of that will tell you, and then the relative reaction to the stock market, but also the rest of the crypto market, as that information comes out, will tell you kind of how people are actually positioning. I think, frankly, it's most of the flows so far has been not related to the election. I'm sure there's some that's been marginal.
Yeah.
The Dems are like a pre-revenue startup right now, where you can just kind of like imagine what they'll be. They're not the alternative, right? They're positioning to be better than the alternative, but as long as you don't have to put anything on paper, then you can kind of like get away with not being attacked as much.
She's doing well right now.
Totally.
She's doing well right now because she is not Joe Biden and she is not Donald Trump.
Exactly.
Yeah, 100. She's just not these other people, but I don't know what she actually stands for.
Precisely.
And
exactly.
I went back and actually looked at some of her policy positions when she was running for president, in that brief stint. She was running on a $10 trillion climate change package. Like
oh, yeah.
I just want to remind people about some of the concrete things that were said and was like a hallmark of her campaign back then, which is like, I mean, I don't think she would do that now, but yeah, I think it does bear repeating that we vacillated so. Do you guys remember we were doing podcasts, right after Trump got assassinated, and it was like, that was his election odds went up to 75%. Now there's been a little bit of a swing. I feel like everyone should just take like a really deep breath and wait until we get more solid information coming from that campaign. Because right now, I just don't think we know anything still.
It's a waiting game.
Pre-revenue startup, Myles, is probably a good analogy. That's they can dangle they're dangling their airdrop right now. Yeah. So maybe they got a little bit of benefit there. Hey everyone, this episode is brought to you by Sei. Sei believes that the EVM is here to stay, but they also believe that the EVM in its current iteration lacks performance and scalability for developers. Sei's recent V2 upgrade has introduced the first high-performance parallelized EVM which coupled lightning fast block times and finality of just 390 milliseconds. That is sub 400 millisecond block time. Very, very cool. This V2 upgrade unlocks a new design space with 100x the throughput, even the fastest EVM L2. So if you're a developer who spent most of your time building an EVM, you can now build on Sei, faster block times, much quicker finality. You get a lot of the benefits of the environment that you're used to. So if you're a developer, definitely go check them out. And thank you very much, Sei, for sponsoring this episode. Hey everyone, this episode is brought to you by Re.al, R-E.al. They're a new permissionless L2 built on Arbitrum Orbit for tokenized RWAs. So basically, they've got this portfolio of real-world assets that actually exist out there that generate yields. They import them on-chain and find ways to reward their users very creatively. So one of the cool things about Re.al is that it's the first L2 where 100% of profits from transaction fees and fees from protocols deployed onto the chain accrue back to the L2 governance token. And currently, I mentioned this at the top of the episode, but they have a reward program going on for early users of the chain where 10% of the RWA tokens are being distributed, which is very cool. So you as a user can go over there and provide concentrated liquidity, trade, borrow, and leverage tokenized RWAs, including T-bills, real estate, and tokenized basis trades. So again, head over to re.al/rewards, and you can use the code found in the show notes here. Tell them that I sent you. Thanks, Re.al, for making this possible. All right, wanted to get your guys' thoughts, maybe zooming into crypto a little bit more. There was this also happened at the beginning of this week, but I think it brings up some pretty interesting questions. I think you could fairly characterize this just as an attack on Compound, a governance style attack. And it was perpetrated by a guy who's been around the block a couple of times. His name is Humpy. One of these fun crypto stories that you just wouldn't get anywhere else. But he's actually he's been active in crypto for a number of years. Has tried things in similar type attacks of protocols in the past. He actually did a relatively sophisticated exploit of Balancer back in the day. So Balancer has this VE sort of gauge type system, very similar to what was pioneered over at Curve, where the longer, it's kind of like a bribe system where the longer you lock up your tokens, you're able to direct emissions to certain pools. And he exploited that mechanism. He was like a whale in Balancer governance, and he directed a bunch of emissions to pools that he controlled. And he ended up getting in this almost like back and forth fight with the protocol and kind of got a lot of his funds trapped. But something happened in Compound where, so he's got this alternative project called the Golden Boys. And it was a very similar thing. He basically voted to give himself some $25 million worth of comp. And this had actually been tried a couple of times. So back in April of this year, and I think Gauntlet did a pretty good job of sort of rallying the troops back then and trying to inform people about what was actually going on and the true intent of the proposal. And it didn't end up passing. But then they ended up asking for 5 times the amount of tokens this time. And I still don't really know what happened. If it was just general apathy, without throwing any stones at Compound. I think there's a lot less activity it's a much less active governance place than it used to be. And so this vote ended up passing. And now I think they've reached some sort of compromise where Humpy has agreed to give back a bunch of the funds in general, but it sort of ignited this debate around governance. And I would be curious, what your guys' thoughts are. One, on first of all, I'm not sure this is even strictly a legal action from the perspective of Humpy here, but two, there have been a bunch of just discussions about governance in general and how things should work, and wanted to get any high level takes that you guys had.
Yeah, I can go. I think spent a lot of time working in protocol DAOs and working on governance, and I think there was like a period towards the end of the last cycle where there was a ton of excitement around DAOs. We had DAO tooling startups popping up left and right. And projects that were actually trying to innovate on governance frameworks. If you guys remember, I mean, obviously like Optimism, Element Finance had a really exciting one, or at the time it was really exciting. And I think, in general, these like, I would say like the progress in DAO frameworks was really around putting in controls and like empowering, contributors to like have more authority, move faster, and also have like, I think on the control side, some veto councils, just operating system improvements, org structure improvements that was not like necessarily rocket science. And then I think, especially during the bear market, like it all basically stopped. Most of the DAO tooling businesses wound down. I think people generally either thought like DAOs were kind of a failed experiment at worst, or just like not interesting anymore. I think in general, even this cycle, you have not really heard about any sort of forward-thinking governance, innovations, right? And so every once in a while, like, somebody who's kind of still paying attention, right, can come along and try to do something like this. I guess I was just trying to go look at the vote. I'm kind of surprised that he was able to get it across without, like, I would imagine he had a lot of help. I think there were some like big voters that came in and tried to shut it down, like the university clubs who are, on summer break, but still paying attention, fortunately. That's my general take, is like, there was a lot of progress with DAOs. I think none of them really panned out. And, it's just kind of like, we've hit like a wall, basically.
Yeah, I think, so I agree. I think that a lot of the there was an enormous amount of excitement back in the beginning of DAOs, and in the same way that you innovate on the tech, for crypto, people were thinking about innovating on org structure, that type of thing. I think a lot of that has been met with failure, but I think there's still reason to be optimistic. There are some really active, engaged DAOs like that are somewhat functional. Like I think Arbitrum is a good example of that, and this type of thing would never have at least passed Arbitrum because there's so much engagement and activity there. But I think that this is a good reminder that there are these like you mentioned, Myles, like not really rocket science things to do. And there's a good thread that got posted here by the CEO at Aragon, and I think there's a long list here basically of different kind of more modular and multi-body governance. So examples like dual governance that Lido has, I think, is a really good example of that. The two sides of the house that Optimism has, I think, would be another good example there. I think, Myles, didn't you do some work with like Orca back in the day as well? Like they have a pretty good.
Yeah, you don't really. I mean, it's not that innovative, I'll be honest with you. It was just pragmatic, and like it works. And I think a few other projects, I think Jito's taking the same sort of approach, and that's why it's just a little bit quieter, in Solana DAO land.
Yeah. What do you guys think? Here's something that this is an old idea that's also getting talked about again, which is VE engages. So this is what we talked about before, but this is the curve finance thing where you can lock up a certain amount of your token and opt into these new conditions. And that gives you, the idea of like locking up your tokens for a longer period of time means you have skin in the game. And then specifically in the case of Curve, that allows you to direct emission to different stablecoin pools. And so it is kind of interesting, right? It's kind of like the idea of staking. It's like you're putting skin in the game, and because you're a more committed long-term holder, then theoretically you're making decisions for the DAO, which are on a longer-term time frame. The other side of this coin, and where it's gotten a lot of pushback, is from, I don't know if Arca ever specifically commented on this, but more of these like groups that saw themselves as activist hedge funds, right, where they could buy up a stake in the protocol and then make decisions. And so I guess what people always
deep value people, they've got like 100 out of 100 times. Like no more.
It's like
DCFs.
All the wannabe Carl Icahns who are saying, well, these tokens are just as governable as all of the corporate equity in Delaware legislation that these. Like, guys, come on.
Well, just out of curiosity, though, where does that fall apart from your guys' standpoint? Because people have talked about this for, not to pick on Arca here at all, but like people have talked about this for a long time, right? And it's never really panned out.
Because they're startups. Like,
I think second of all, they don't have any of the legal protections that equity has. And then I think you can probably get away with both of those things if the project is good enough. But like doing DCFs on SushiSwap at the top of their TVL and volume, Like, you're just extrapolating a trend that is the opposite of what is happening in reality. It's like when people were saying that OpenSea is going to be, like $100 billion business when they did the round at like 13 or 14 billion. I also think like DAOs haven't failed. A lot of the projects around DAOs have failed, but like Maker in like extremely high functioning DAO, Lido, high functioning DAO. I'd even say Uniswap is like a high functioning DAO.
Yeah.
Like, I don't think the message is that DAOs have failed. I think the message is that like we're seeing a very typical rate of startup attrition. Like, it's like saying corporate equity doesn't work after 99% of the YC class gets, killed every single year. It's just, you got to look for the positive, examples, not the negative ones. But I do think there will be activists in the future and even in the present with like Humpty doing the compound thing. I just think the question is like, is compound a successful protocol? Or can you make it into one? And I think you probably can relative to where it is today. And maybe that's a big win. But I think maybe that's the better way to think of all of this is like, people doing DCFs to justify 100x from SushiSwap is very different than like people getting in somewhere and turning around a project that's like kind of bottoming out. You can probably squeeze, a 3 or 4x, blood from a stone type idea, but you're not going to have like this thing that can go off and challenge like JP Morgan with like compound. It just like keeping expectations realistic is probably the most important thing.
I think there's two things. There's sort of like the turnaround value mindset where you're like, oh, we can, and this is I think what Humpty did is ultimately what has been proposed as a response is let's turn on the fee switch. And maybe the turnaround, oh, this isn't working, let's step in and force a decision to be made, is positive. The other one, and more of what I think everybody's mindset is when they think of activist activity in crypto, is let's extract the residual value. The treasury is worth more than the market cap of the token, therefore let's buy all the tokens and flip the treasury over to token holders. Like that stuff never works, because what we're talking about, there's no governance, there's no legal framework, there's no uniformity of this asset class. It's all like software. Every one of them is generally different, other than the ERC20 standard. Basically, every component of it is different. So I definitely think that there is an interesting angle on the activist for growth mentality. If something isn't working or something needs to change, step in, cause some situation to happen and then force that change. And I think if that's the ultimate, Humpty obviously was a large token holder, or at least had a lot of tokens that were delegated to this person. And I'm sure a lot of it was owned as well. But, one of the things that wasn't flipped on was the fee switch. Now it seems like that is going to happen. It's probably accretive to token holders. That is an interesting angle if you think that that's the ultimate cause or the ultimate desire that he originally had. Maybe he never actually wanted to print the $25 million worth of comic, just wanted to turn on the fee switch.
Yeah, I think that's another, not to actually bring it back to politics as well, but I think that's another thing that people is a potential catalyst, which is being underpriced, which if you got a more friendly regulatory administration in, maybe you could start to just make some rules that weren't catastrophic to early crypto startups and DAOs. And like you're starting to see, Uniswap had a couple of fee switch proposals this year, which they've been talking about this forever, but it got further and further along than it has in the past. I don't know if you've seen the Aave, where we talked about it last week, actually, on the roll-up, the Aavenomics revamp. And part of that is like the back end, the way that the protocol deals with the risk of bad debt. But a part of it is kind of something that, which I think there's some real desire from some of these more established DeFi protocols that do have functioning DAOs and real cash flows to signal to token holders that, hey, even if we're not going to give cash today, like there's a road, there's a line of sight to that actually happening. And that could be huge.
Make no doubt, if it looks like it is going to be someone who is pro crypto in the White House, there will be a lot more of this. There'll be a lot more testing, a lot more experimentation, a lot more, throwing stuff against the wall to see what sticks. And I can attest that there are a lot of people who are waiting to see that before they even try things right now, sitting on the sidelines, ready to go. And I think that that's where, we're talking about the next, catalyst, or the next kind of like market trend. I think, one of the reasons why maybe the not the market pullback in terms of price, but the market pullback in terms of activity has slowed, because the change in, the political winds, at least in terms of, what November's elections should be.
Yeah, I completely agree with that. And can you just imagine for a second what would happen had someone like Hester Peirce in charge of the SEC, and this like safe harbor that she's been proposing forever, which is just extremely reasonable, right? And just very in line with the protections that, previous administrations have given to new industries. Imagine if they just came out and said, hey, you can launch a token and it can transition from a security to a commodity, which, by the way, apparently there's actual legal precedent to do. And for the first 5 years or 7 years, you can launch this and basically operate as a security. You just need to have a line of sight to decentralizing. Here are the metrics that we're going to judge you on. I mean, it just feels so reasonable and like such a layup. And, I know we've talked about on the show a lot, just like the market structure bill and the stablecoin bill, but it just, this also feels like an area where, yeah, like overnight, just by putting basic legal protections and some sort of structure in place, you could have an entirely new industry crop up. It just feels
one more thought just on this, and not to like completely bring it back to politics, but I did hear, and I think it was Avi who was talking about this on the 1000X podcast. But he had an interesting analogy. And I know we talked about Kamala being, or ETH being, the asset of the liberals, which is hilarious. There's actually a different perspective, which was, it doesn't matter sort of like your political sway whatsoever, but if Kamala becomes president, it's pro Bitcoin, and the reason why, and pro Bitcoin over everything else, and the reason why is because of the $10 trillion Green New Deal, the massive ramp in spending, the debasing of the dollar because of macroeconomic reasons, whereas the Trump position is pro Ethereum because it's pro innovation, it's pro experimentation, it's pro regulatory framework. And think about the comparison of the two. If the Democrats want to be pro crypto, they have to catch up to the level of having a safe harbor, having a regulatory framework, allowing people to try things, allowing tests and experimentations from an entrepreneurial perspective, onshoring entrepreneurs again that have left in the last 5 years. Like it is a pretty steep hill to climb. And I mean, we obviously welcome it, but there is an interesting angle of the two perspectives are not necessarily not pro crypto. It's just they're pro crypto in very different ways.
I would say that the Kamala, potential is, I don't think it's, I think it's like pro the assets that have ETFs today. And probably like you're kicking the can for like the Solana ETFs a few years, probably minimum. And then that's like the ETF landscape. Then the legislative landscape, I think stablecoin and market structure give you a path, like we said earlier, but you're not going to have like the SEC safe harbor. There's like, what do the ETFs do? There's like, what does the SEC do? And then there's like kind of what the general temperature is. I think the Trump perspective is like, it just becomes much more bullish for basically every coin. The path to ETFs get a lot easier. But I think a lot of it hinges on just like who the chair of the SEC is.
That's a better way of putting it. It's not ETH versus Bitcoin. That was just the analogy that they said on the pod. It's more like, does the industry become more wide or does the industry become more narrow? And that's kind of the question. Everything that's in an ETF right now and blessed from a regulatory perspective will massively expand under a Harris presidency.
I have a question that it might sound a bit heretical. I'm not like also super familiar with the specifics of the safe harbor. I guess, proposed policy, apart from, it makes our lives a lot easier and you could graduate essentially. And I think for L1s, like we can easily draw the analogy to the commodity, especially when it doesn't have, this is not a governance token, right? But for something like Compound, right, we're also talking about like a protocol feels like an app. We're talking about dividends, right, with the fee switch. What does it graduate to? I guess technically, if it's not a security after 5 years, is it some? It's not. I just have a hard time being like, yeah, this is like
graduates
Solana.
to a non-security, which is probably the least informative way to describe it. But like, even if you think about like what is actually trading on the CME, it's not a commodity; it's a non-security. So
True.
there
But
isn't.
how many of those are like also, like holding equity, and there's nothing on the CME that you have like voting rights on, like, a product and get paid dividends from the revenue of that product. It's an uncomfortable question, but it's like, what is this?
That gets to Michael's point about like the narrowness, though. Like they're not going to like expand that category in a Kamala administration. I mean, like we don't think. My sense, just like orthogonal to this conversation, is that the industry generally has a lot better lines into Kamala than it did to Biden. Like Mark Andreessen and Ben Horowitz were like on this podcast about like trying to get a meeting with Biden, and they just like ghosted him. And now you kind of got Novo kind of in the mix. You got like all these kind of more liberal leaning, crypto, centimillionaires, billionaires, whatever. I don't know. Like it'll be interesting to see what she's like. My sense is that it will be better than today. Probably not quite as good as Trump.
Yeah, can't be worse. Can't be worse.
Also, when Vitalik posted, like don't vote for a candidate, based on their crypto allegiance. That was like right during the RNC. I thought Selkis was just going to cancel him. Epo, you have experience in this now, and I was like, this is not great for you. But like as per usual, the man is prophetic. He's like, I'm playing both sides against the middle to come out on top, and we'll see. But the Avi Feldman podcast, I just don't agree with Bitcoin being the Kamala. Bitcoin is Orange Man coin.
I agree. Yeah,
ESG coin. Like just
Bitcoin is
keep it real.
Yeah.
So, we'll see.
I haven't caught that one yet, but I'm in complete agreement with you. Like I think he is. It's also interesting to see, I mean, just like going out of our bubble, like into the world, the perspective that people have on this, it's like, it's worth just like engaging with people outside and how they think about this stuff. And I think there's some element where if you want to produce political change, like I actually am really sympathetic to this idea of like stop with the both sidesism, right? Like you just have to look reality in the face and see who is your friend and who's supporting you and like what is the best way to achieve our objectives, which is they're actually super reasonable, right? They're just like, I just want fair treatment that any other industry gets. And there's also a high growth tech industry, which is going to generate a bunch of revenue and jobs and progress. And isn't that what we are supposed to do in the US? Like that's kind of our whole business model here. So, we've been made to feel like that's like we're asking for a lot, but we're just asking, right? It's an extremely low bar for what we're asking for. And so if you're not being given that, you have to push and you have to fight. And that makes a ton of sense. But I'm also sympathetic to how most of the world views crypto, even though it's a political issue. Like if you just talk to so many people have this really negative connotation of crypto still. And I think what Vitalik probably got right in that post is that like, there's no reason like fight, but you don't need to sort of needlessly encourage this negative stereotype that exists about crypto too. There's a way to fight in like a positive way. I don't know. I don't know why he wrote that. Maybe he has really strong social views. Like, I don't know, but that's my view on this. It's like, fight and push and, advocate for what's yours in whatever way you feel like is best. But I don't know. I kind of have to be realistic too about how the rest of the world views crypto. And I think we're in the battle of winning hearts and minds. Right. And I think there's a good way to advocate on a large stage and like a less good way. But maybe that's a cancelable opinion these days. I don't know.
We're gonna know more about that in the coming weeks once we see the platform. Right now, we don't have all the information.
Yeah, I completely agree.
Let's talk about the stock market for a second because this is shaping up to be a pretty historic day.
Yeah,
the Russell 2000 3000, which is like the stock market for real businesses, is down 5%.
Yeah.
This doesn't happen very often. Like I think there's some people in these pod shops who are having, wow, the Nasdaq's down 3.2%. Like this is the start of, we're going into a recession, maybe a bad one. Employment is up to 4.3. Unemployment is up to 4.3%. People are now pricing in about 50-50 odds of a 50 basis point cut in September. Like I remember
Unlocked yesterday said when they cut, it'll be too late.
I mean,
Yeah.
stock market needs a CTO right now. Someone needs to dev this because it's not looking good. But like this is I remember in 2022 we talked a lot about like, one of the big indicators is where's the 10-year at and where will it peak at for the cycle. And the 10-year is down to 381. That is, I mean, the peak was almost 5%. 10-year. Yeah, maybe a little bit more than 5%. Like we've clearly put in the high for the 10-year. The cost of money is going to go down. Rates are at 5.5%. The next cut will be in September, the next Fed meeting at least. But we're really starting to move into a different type of economic environment. And there's a chance that the unemployment rate goes to like 5 here. Like the unemployment rate is something that, if you think about it like a stock, like it trends. It's not like it moves like a tenth of a basis point, and then stops. Like you have to like do something to stop it. But it'll be interesting. A lot of the feelings that people have had about the economy being weak are now starting to manifest. And this will also be something that is important in the election. Like if you're trying to own the economy and the economy looks like shit and the stock market's crashing 5%, those are the real businesses too. The fake tech businesses are down like almost an equal amount. Like, whew.
So a couple other thoughts. So I don't know if you guys have seen the Nikkei, which is the Japanese stock market index, but that's having one of the worst.
They need to have.
Yeah, they need a CTO too. But they're having, it's like one of the worst trading days since Black Monday or COVID for them. So it's down 6.
It is the
worse than March 2020.
Yeah.
It was the worst day since 1987.
Yeah. So pretty incredible what's happening over there. And yeah, the US stock market selling off. I will point out Bitcoin is flat to green, at least as of the time of this recording. And I think that's significant. And actually one of the things that's made it a little bit tough to be in, to have all crypto bags for the last like month is that the stock market has been ripping and Bitcoin hasn't, and crypto in general hasn't been doing so hot. And this feels significant to me. I think that it says that crypto's trading on, starting to trade on slightly different things than maybe like the S&P or the Mag 7. And Bitcoin has historically done a pretty good job of actually sniffing out rate cuts. And look, what's happening right now is this might be, we had a really bad jobs print this morning. It was way weaker than economists thought. Employment is up from 4.1% to 4.3%. This is what people, I think it's what Vince, you just said. It's like, this feels like something is about to break, and we've seen this movie before, and this is when you get rate cuts. So maybe this is something that's bad news is good news, and Bitcoin is just sniffing that out and getting ahead of it, basically.
I think like crypto moves like twice as fast as TradFi.
Yeah,
where like we crash, there's no bailouts, there's no limit order downs or timeouts. It's 24/7. And then like we kind of sorted out amongst ourselves, and like even the estates, like we cleared that supply pretty early on in terms of like where we are in the market. Like the GBTC, now the ETH, the BlockFi and Genesis stuff, I think is today. Like I saw a tweet that they're distributing today. TradFi moves at half speed. And so like all the supply overhang and shit that needs to get bailed out or fixed, like that's still to come. And like I saw like these weird articles about like Deutsche Bank and Morgan Stanley trying to do like these like super complicated, like we're going to sell credit derivatives to like other people because we don't want these anymore. And like, they're going to sell it to other people. Like it feels like there's a lot of stuff in the financial system that's like trying to work its way through the piping. And this is probably when they start to clear the overhang. and the overhang of like the AI stocks maybe not being as interesting as possible or as they might have been, and all the other credit and debt that had kind of been taken on. But like all the commercial real estate stuff too is like it's not fixed yet. It still needs to go through this process.
So this is the 2-year, which has been, people have been pointing out, it's been selling off. There's been actually something that looks like a bullish steepening. But look at what's happened in the last couple days. I mean, the 2 years just sold off a lot here. The 2-year and Fed funds rate are extremely correlated, right? And so I think this is actually the market pricing in or indicating that there are going to be cuts ahead, or that yields are going to continue to go lower. And one other nuance here as well, which is it's not typically bullish for stocks when the Fed breaks something and then they have to panic cut. That's actually usually not a good thing. But the fiscal dominance of like spending $2 trillion in deficits is still underlying here. And so I think a lot of people have very rightly questioned, okay, usually right about now, you'd be really worried about a recession and that the Fed has pushed things too far, and that we're going to have to take some pain here. But I think the underlying nuance is that the reason why we haven't gotten absolutely smoked since this, 0 to 5% insane hiking cycle that we went through in 2022 is the underlying, support from government spending is still there. So if you're in this scenario where you can't have a horrible recession because of how much the government is spending, and it feels like something is broke, and now the Fed has like unemployment is up and inflation is going down, and we're in for rate cuts, like that could, there's a bull case there. I mean, that could be Goldilocks for something like Bitcoin and crypto. I mean, if you want to
dude,
paint a bullish picture.
this is it. This is what we play for. Like, I mean, they can break whatever they want to break. I don't know how much correlation it has to crypto at this point, just given everything crypto has gone through and the renewed bid from these ETFs. But like, let's start dropping these rates as fast as possible.
Yeah. I guess speaking on like more macro high level stuff. All right, Myles, I know you got to jump too soon. Maybe we could just wrap a little early here and just talk about the ETH ETFs. So yeah, first week of ETH ETF trading is now in the books. Vance, I've been seeing you post a little bit about this. We talked about the speed running of the outflows that we saw in GBTC. But the last couple days, those have flipped positive and we're seeing inflows. And I think it's the BlackRock product, ETH. I don't even know how to pronounce that, which is leading the pack. And they had some pretty significant inflows over the last day or two. So, and I saw you talking a little bit about a rotation from Bitcoin ETFs into ETH ETFs. So how much do you think that rotation is happening? And then where do you think we are in terms of, finishing out the outflows from the Grayscale product?
You're pretty close on the outflows. Like, there were less than 100 million yesterday. I think like the prediction that I've had is like ETF and Bitcoin flows are going to be basically the same. And if you look at just like the BlackRock flows, which are driving most of both Bitcoin and ETH, like yesterday I think was like 170 for Bitcoin, and then it was like 90, I think 7 for ETH. So like we're at 50% today, and I would expect that to be roughly kind of the base case for what the flow percentage will be. And that is, twice as high as basically everybody else has said. And I think it'll continue to go higher. But it's been a smashing success for the ETH, or the ETH ETF. And it's good to see Grayscale speedrunning the outflows as well, because that just hangs over the market. And it feels like the mini trusts are also absorbing and helping at least some of that flow to get out. So it's very, very positive. And I do think just like concentrating the bid and the marketing and the distribution around these two assets is really, really great for the whole space, just because like BlackRock and the other ETF providers have an obligation to make sure this stuff goes well. Like if these are duds, it's like not a good look. So yeah, it looks really good, honestly.
I agree. Who we should get on the podcast at some point is like Matt Hogan, because they've actually done a really good job with they've got ETHW. They've done a really good job actually of attracting flows. I think they've got the third largest ETH ETF, and I would love to just get an understanding from him of like how he's talking about ETH or selling ETH to a more TradFi audience that isn't in the weeds or on the same debates that we are, like L2s and block times and stuff like that, which I don't think they care very much about. But yeah, it'd be cool to get someone who's like on the ground as well, or if someone from BlackRock, maybe that would be willing to talk about this. But I think that could be cool. And I guess final, we lost for folks who aren't following along on video here. We lost both Michael and Myles, who had to jump. But last question for you on so Nomada, which is shout out to Anoma. It's the sort of privacy focused L1, which is launching under the Anoma framework. They sort of floated the idea this week of unlocking 100% of their supply at TGE. And I think the way to understand this is in the context of everyone is sick of these, low float, high FDV, type launches where there's a period of time, like a year or two, where it just feels like everyone's getting dumped on by investors or the team that is waiting to unlock. And so there's this idea of ripping the Band-Aid and just getting that all over with on day one. And then on the other side of this, Nomada hasn't talked about this, but some people actually advocate for much longer lockups, right? So WorldCoin has these crazy, 8 or 10 year investor lockups. And in the past, DYDX, when they've had big unlocks, have actually voted to push that out further. And so there's kind of the way that it gets done today, which is reminiscent of, how it works with stocks, like anywhere from a 1 year to 4 year type lockup. And then you're starting to see people ask or, advocate for the idea of 100% of unlock on happening on day one, or just push it, continuously further out into the future, and wanted to get an understanding of how you think about that.
I mean, I think the worst of all worlds is kind of what we're doing currently. I also think a lot of it is just dependent on, like, is this a worthwhile project? Is it interesting enough? Especially in a world where, relative to a few years ago, there's like 100 times more projects. Like I would argue that if something like an ETH or something like a Solana came out with 100% unlocked or 0% unlocked, like the path that they would take would be probably the same. Just like they're successful projects, and they will go up in value. And kind of every other discussion about like locks kind of feels like window dressing around, like, is the project good or not? So, maybe that's kind of like a cop out, but I feel like, coins should launch no higher than like a few billion and give people a shot to be early. And then whatever kind of happens from there, that's just kind of up to the project. But there was a tweet from Starzu, who's the CEO of OKX. He was talking about AVO and like how AVO has gone down 90% since it listed. And he's like, what are we doing here? Like, we kind of need to, the VCs, the exchanges, the other people, like, we need to kind of think about and protect like the average retail user. And so I think that's kind of part of a broader conversation that's starting to happen around like the slowing of exchange listings and the rethinking of token economics, and just like a higher bar for quality for VCs, where, if it's just like the average run of the mill, like another L2 or like another, whatever protocol, like it won't get listed on the major exchanges. And then all the incentives for that type of low float, high FTV go away. So I think the market is kind of fixing itself, but it's, everyone kind of needs to think about, everyone who's in the supply chain of capital, like, what are the long-term ramifications of funding 100 projects a year? Because they're just not going to get the same listing if the coins that have been launched kind of keep performing how they have been.
Yeah, I agree. It's almost, Bill Gurley has talked about this. He went on a little bit of a campaign a couple of years ago for direct listings, and there is this this dynamic of if you list at a higher price, then that's what the essentially like the sale is. The dynamics in crypto are a little, but that's when the actual money that enters the bank account, right? And everything after that gains is just secondary trading. But the downside of listing something as an IPO and then it pumps is you could look at that and say, hey, I could have actually listed this for a higher price. Clearly, there was more demand for this, and I could have more dollars in my coffers today. But what investment bankers will always argue is there's something aesthetic. It's kind of like a marketing thing. If you list something and it immediately goes up, people will remember that. And we have the opposite problem of that in crypto, where we just list at these incredibly high prices and then they just tank like 90%. And clearly that's not tenable. I mean, that is a part of the problem right now. So yeah, I sort of have a feeling it's this murky area of how the initial price discovery ends up happening. I'm not actually sure that it's unlocks or, again, this is one of those things that I think actually works pretty well, is that, in the early days of a company, the supply of the equity expands, people will eventually sell out, which is, that's good. There's some amount of people that want to take on early stage risk in a product, and they don't want to hold for 10 years, and they'll sell to people who are more comfortable taking less risk and getting less return. I don't think that idea is broken. I think that actually works pretty well in practice. It's just, however we're valuing these things when they quote unquote go live, and the distribution of gains between retail and private investors. I mean, I think that's the thing that's a little bit challenging at the moment. So
yeah, I mean, the things that the market is going to fix is like, there will be less incentives to fund the average shitty project just because it won't get listed in this new environment where exchanges are being more conscientious about what they offer to retail. That will certainly help. I think what we want to avoid in the meantime is like turning people off from the space, just given like, I mean, if you've seen the churn numbers on things like meme coins, some of it is hard to imagine those people coming back.
Yeah. I agree. Yeah. All right, dude. Well, this was a fun one. Congratulations early on 5 years of framework. I know you guys are doing your thing in a couple days.
Thank you.
Yeah, man, it's a massive accomplishment. You guys have absolutely murdered it. So hopefully you guys enjoy your little hang. And I'm sorry I'll be missing you in New York. But
yeah, well, thank you, buddy. Appreciate it. Have a good rest of the day.
Yeah, man. You too. We'll talk to
Peace.
you. All right, guys. One more shout out here to this episode's title sponsor, Sei. There are a ton of reasons to build on Sei. If you're itching to get started building or using the ecosystem, head over to sei.io. That's sei.io. Get started. And be sure to let them know that we sent you. Thank you, Sei.